We've seen another meme stock craze this summer, and Kohl's helped kick it off.
Quarter was just okay.
Quarter was okay.
Just okay.
Okay.
I mean, not anything more than okay.
So not something that would justify a move of 100% in the stock?
Absolutely not.
The legacy department store saw its stock soar on July 22nd. Since then, it's fallen, but still remains elevated. We've seen it before. The rapid gains and losses of cheap stocks of well-known companies.
I mean, who am I to say that that's bad investing? But it just doesn't seem to be investing at all.
You have the meme stock buyers having that opportunity to kind of stick it to institutional investors, to smart money, and it's like, look, I can buy something and make the stock go up, and it's not even about the fundamentals. It's just because we have power in numbers and we have the ability to do this.
So how exactly does this happen? And why did Kohl's get caught in the middle of it? A meme stock is a stock that trades with volatile swings in its share price that isn't based on the underlying business fundamentals. Typically, they are cheap and heavily shorted, meaning retail investors have bet on the price of the stock to go down.
When you're shorting a stock, you borrow it from a broker, and then you immediately sell it on the open market. Let's say I sell it for $100 a share, but I'm hoping it goes down to $50 a share. I sell it, I get that $100, and then when the stock goes down to $40 or $50 a share, I buy it back on the open market, I return it to the broker that lent it to me, and I keep that $50 profit. So you can make huge profits on shorting a stock, but your losses are also exponential because I borrowed the stock, I sell it at $100, and then it goes up to $150. It doesn't go down to $50 like I wanted it to. So now I have to pay $150 to buy it back off the open market because I still have to return it to my broker.
When the short sellers jump back in to buy the stock, it further elevates the share price.
So what you end up is this kind of really intense feedback loop that pushes and inflates the share price. The fluctuations tend to vary, but it is very much a social media phenomenon, hence the name meme stock, because it comes from kind of social media trends and people picking up on it. And a lot of the people involved can be very casual investors. They can be people who do investing from their own homes, people who just love to dabble and play with the markets. They're not traditional Wall Street investors.
GameStop is widely recognized as the first meme stock. A user by the name of Roaring Kitty set off alarms on the Reddit thread Wall Street Bets about the gains he had made on investments in the stock. It led to hordes of investors coming together on Reddit and inflating the share price.
You had kind of this perfect storm. It was heavily shorted. You had Roaring Kitty pounding the drum, and then tons and tons of people piled into it, and then it left Reddit and it became a global sensation, right? And so you were able to drive the prices up to insane highs. The hedge funds that had shorted it needed bailouts, lost billions and billions of dollars. And so GameStop is kind of a story in and of itself, but that same kind of idea has moved to other legacy penny stocks, dead names, not just retailers, but you see a lot of that in the retail industry, and that's where Kohl's comes in.
Going into July 22nd, about 50% of the trading activity around Kohl's was investors shorting the stock. Much like GameStop, online chatter took off on platforms like Wall Street Bets that kicked off the squeeze.
Kohl's is a well-recognized name. It's a household name. And it's much easier to get people interested and excited about manipulating a household name than it is with a relatively unknown stock. And I think that recognition is quite important in allowing almost the meme or the narrative to spread and for more people to jump on the bandwagon.
Kohl's chief marketing officer, Christy Raymond, actually benefited from the upswing, selling 26,500 shares, or about $500,000 worth of stock. A Kohl's spokesperson told CNBC that this trade occurred automatically, as a part of a pre-established trading plan, and would have been made on any given day when that price threshold was met. In the days following Kohl's meme stock surge, GoPro, American Eagle, and Krispy Kreme also saw sharp swings in their stocks. Once again, Reddit users came together to short squeeze the company's stocks. Open Door Technologies was another name that exploded in July, even before Kohl's, but it was mainly driven by hype from one hedge fund manager in particular.
It can be really hard to predict what's going to be the next big frenzy. It's typically companies that might have a household name, maybe some nostalgia factor, right? You had a Bed Bath & Beyond was a meme stock. Kohl's is obviously a department store that many grew up shopping in. GameStop, we know about that one. AMC, GoPro, and Krispy Kreme are certainly household brands that we all know. So any company that's really down, heavily shorted, it could be the next meme stock, but it's really hard to predict which one is going to see big gains, which ones people are going to lose money from.
Here's a 1-month look at the share price of other companies that got thrown into the meme stock frenzy along with Kohl's. One common thread amongst these stocks are that they trade cheaply. Kohl's business, for example, has been on the decline for years. From the beginning of July 2021 to the start of July 2025, Kohl's stock price was down around 85%. The company has seen shrinking sales and declines in profitability. A 2024 report from Global Data found that Kohl's has lost 1.3 million customers over the previous 5 years to competitors like TJ Maxx, Target, and Ross.
Sephora has helped them to grow, but in a way that just shows the weakness of Kohl's, because most of the beauty growth has been driven off the back of the Sephora brand. It hasn't been driven because the Kohl's brand is great. So Kohl's is in a very, very difficult position. They're trying different things. They are experimenting. They obviously had problems with their CEO at the start of this year, and they now have an interim CEO. So there's a lot of moving pieces at Kohl's, but the general message is this isn't a retailer in a great state.
Between 2019 and 2024, its Sephora partnership has led its beauty and accessory sales to rise by 38%. Still, overall sales are down 18.5% during the same time period. And when the beauty segment is stripped out, sales are down around 26%.
Whilst there are weaknesses and there's a lot of shorting of the stock, this isn't a stock that is at danger of going bankrupt imminently. But, of course, there is a danger with all these kind of financial maneuvers, because a lot of people piled into Bed Bath & Beyond believing that the firm actually had a future, and of course it didn't. It went bankrupt, and there were a lot of retail investors that lost money from buying the share prices at inflated levels. So, in some ways, having these wild swings, if they persist, it is a distraction from the day-to-day. And that's where Kohl's needs to focus. It's on the day-to-day.